The general consensus is that China will overtake the United States economically in the next decade. My next guest, however, says not so fast. He's here to talk about it. Welcome, Greg Curtis.
Thanks for having me, Greg.
All right, you say that China is in serious trouble. Tell me why.
I think there are a lot of reasons. For one thing, growth is decelerating. That's a very bad sign for the Central Committee, very bad sign for the party. Remember, the trade-off has always been, we'll make you rich, you keep us in power. That bargain is now breaking down, and nobody knows where it's going to go from there. You don't see countries emerge from an emerging phase into a developed phase unless they develop a really robust civil society. China is very far from doing that. In the current regime, everybody had big hopes for it, but already they're sort of going in the other direction. More Mao, more leftist, more total control by the party.
So you think there will be a political crack-up? You think there will be a revolution over there?
Well, I hope not, because it would be a catastrophe for the world in general, and especially for countries who are big sellers into that commodities market there. Australia, it's already been very, very tough on Brazil. But I do fear it could happen because I don't see, there's only two alternatives. Either the Communist Party gives up power, in which case I think China goes the way of the Soviet Union, breaks up into a lot of smaller chunks, or they crack down, maintain their power, and China's growth stops.
Where are the symptoms for this? Because right now all we see is that 7% growth. A lot of people say that that number is fake and it's managed and you shouldn't believe those statistics. But even if you give it 2% here or on either side, go up to 9% or 5%, sure. I suppose that's acceptable. So where are the cracks that you're seeing?
Well, that's the biggest crack right there. Remember, they were growing at 14% just a few years ago. So you've got this tremendous momentum, these tremendous expectations out there in Chinese society. They're not going to be met. They can't be met. And so corruption is only going to increase because the pie has gotten a lot smaller. The more powerful you are, the more you want that pie. And I think the growth is going to continue to decelerate.
And what does that mean for American companies that are betting big on China?
I think actually a great many American companies are betting less big on China. So people are saying, if I'm going to build my next plant, do I really want to build it in China with all that's going on there? Do I really want to be giving up my intellectual capital? Because that's what will happen to you. Why not build it in Mexico, which is nearby, or Turkey, or some place that has at least a semblance of a civil society, a democracy, a multi-party democracy.
And as you mentioned, this will affect China's suppliers when it comes to the commodities, the raw materials. So what does this mean for the likes of Brazil and Australia?
Well, I think Australia's economy is a little more broadly based and much more developed than Brazil's. I think Brazil's in real trouble. Brazil has really allowed itself to become an economic client state of China. So whither goes China, there goes Brazil.
So what should investors do? Do they short emerging markets? And how long will it take for all this to unfold?
Yeah, I wouldn't short emerging markets. I think valuations right now favor the emerging markets. I mean, they're relative, especially to U.S. domestic stocks. They're very, very cheap. So tactically speaking, we're maintaining a market weight in emerging markets roughly. But I think longer term, strategically, you're going to want to underweight, not emerging generally, but especially the BRICS, where growth is decelerating. Put your money towards the MISTs, the Mexico, Indonesia, Turkey group, and also the frontier markets. Very interesting stuff going on there.
All right. Thanks a lot, Mr. Curtis.
My pleasure. Thanks for having me.
And thank you for watching The Street.